How's everybody doing today? Testing 1, 2, 3. Testing 1, 2, 3. Hope you're all having a great day. All right, good deal, good deal. Yeah, have quite the crowd, and like Gail said, we've got just about every continent covered, I believe. I tell you, we just cannot find any traders in Greenland. So if you guys know of anybody that trades in Greenland, definitely send them our way. So that'll be when we know we're doing a good job, when we can get to somebody in Greenland. I don't think we've seen anybody tune in from there since we started. So that's going to be the goal: is everybody can go out and make a trader friend in Greenland and help spread the good news in Greenland. But real quick, before we get started, give you a second to read through a risk disclaimer. This probably is not the first time you guys have seen it. It's probably not going to be the last time you've seen it. But anything you can do to make money in the markets, you can also lose money, and there's significant risk involved. So I'll give you guys a second to read through that. And real quick, while we're doing that, if you can, type in where you're joining us from today, so you can let us know where you're tuned in from. Always fun to see that. Okay, good deal. Chicago, England, Florida, Australia, Canada, Indiana, Florida, Chicago, Prague. All right, good deal, good deal. Canadians in here. Yeah, that's right. Okay, good deal, good deal. All right, well, just tell you a little bit about the TradingPub, and then I'm going to turn things over to Aamar with tickStrike. But the mission of the TradingPub is to provide a place for our patrons where they can hang out with some of the top traders in the industry. The pub is the place to receive quality education, all while interacting with traders and investors who are just like you. 3 things we try to accomplish through the TradingPub. We want you guys to learn about the market from top traders, and we've got relationships with traders from all across the globe that have taken time out of their schedule to come in here and share some really good quality free education with you guys. We want you to enjoy your time while you're here. You know, everything's better amongst friends, so hopefully we'll have a good time. And then also try to put a focus on charitable giving and raising funds for inner city awareness, so and development projects. If you want to stay up to date with the TradingPub, you can find us on the web. It's www.tradingpub.com. For those of you that are in the Twitter sphere, you can find us here. It's twitter.com/tradingpub, and on Facebook, facebook.com/tradingpub. So we will post a copy of the recording on Twitter and Facebook. So if you follow us there, you should be able to get a copy of that. All right, at this time, I'm going to turn things over to a good friend of mine, Aamar Hussain of tickStrike. A lot of you guys have heard Aamar and the work that he's done with Pivot Farm, and I was actually one of the original subscribers and actually been a beta tester of tickStrike, which is the new audio market tape reading software that he's been working on. But the subject that he's going to educate you guys on today is really more about order flow and how the markets have changed from years ago, where there was really a major edge, on the trading floor because of the fact they could trade that order flow. And now that it's changed to an electronic market where the majority of volume comes in via electronic trading, it's important to still understand that order flow is important and that is what moves the market. So Aamar, at this time, I'll turn things over to you. The last thing I'm going to mention, the only real rules we have here, like I said, we're very laid back, but we just ask that you not be the guy on the left. For some reason you're not interested in learning about order flow today, don't be the guy on the left. Just, you can tune out and enjoy the rest of your day, but be cool, enjoy the presentation, and try to get as much out of it as possible. So Aamar, at this time, I will turn things over to you.
Thank you so much, Morgan. Guys, let's do a quick last sound check. Let me know if everyone can hear me. And Morgan, you know what? I was actually thinking I should fly over to Greenland one day and give you that one person in Greenland. I think that'll be a fun thing to do, just to see it on the map when we can make that happen. But guys, thank you so much for having me today. I'm sure many of you guys know I run a service called Pivot Farm, and Pivot Farm is based on a professional trading floor. It's something that I've done for a long while, and I'm a trader that's very much focused on identifying, key areas to do business, identifying important support and resistance level areas, where you're likely to see a price inflection. Now, that's part of my trading, and a very, very important part of my trading. And the other thing that I do is analyze orders. I analyze the order flow, I look at the depth of market, and I generally tape read and look at what the flows of the market are doing overall. And this is something that I've done for a very, very long time, and it's been a very, very fundamentally. And any of you guys that are probably Pivot Farm users in here, I'm sure there's quite a few who have contacted me, and we've talked about trading strategies. They know that order flow is something that I pay a lot of attention to, and it's kind of something that we've definitely thrown ideas around about. Now, guys, before we get going, I apologize that my voice is a little bit hoarse today. A friend of mine actually brought over some Cuban cigars. I'm not really a smoker myself at all, but I gave them a shot today, and it's left me with this rather cloudy voice today, so my apologies for that. Guys, usual disclaimer, as I'm sure you know, there's substantial risk of loss in trading, and past performance is not indicative of future results. So guys, before we get started, what do you trade? Type into the text chat, let me know the group of traders that we've got in the room today. You guys, ES traders, stock traders, Forex guys, what floats your boat? So we've got a bunch of stock guys, Forex guys, options, futures, Forex. Wow, it's a big mix. Great stuff. Oil, stocks, E-minis. Excellent. Very, very diverse mix today. Great stuff. Great stuff. All right, guys. So the big question, what exactly is order flow? What are we talking about here? Now, order flow is a very, very simple thing. It's basically, whenever you've taken a trade, you're contributing to order flow, right? It's when you're hitting the bid, when you're hitting the ask, when you are pushing that trigger to buy or to sell, you are contributing an order to the order flow. And order flow is the fundamental process of the market auction mechanism. That's it. It's a very, very simple thing. The flow of orders is what ultimately decides what price is doing. Supply and demand is facilitated by the flow of orders. So if there's an increasing supply of sellers in the market, people, taking the market lower, supply is coming in, the order flow is what's going to decide how that's happening. Order flow essentially derives price. So each of us individual actors, there's over 280 traders in the room today. Each of you guys, whenever you are taking a trade, you are part of this massive auction mechanism, and your orders are what are moving the market as a cumulative effect. And price discovery, price going up, price going down, is powered by our cumulative action. It's by all of us moving together, taking our trades, and moving the market in a certain direction. Does that make sense, guys? So give me some yeses, just to let me know that everyone's with me on this little part here. So order flow is what drives the market. It is the fundamental force of the market. All right, so let's do a little exercise, a little visual exercise here. So I've got a chart here, and the chart is going to be cut up into sections. The section that's in red, I want you to tell me what is the overarching or the dominant order force here. Is it the sellers? Is it the buyers? What percentages do you see for both? Is it 50% sellers, 50% buyers? What would you say are the dominant forces? So it's very much downside. What kind of percentages are we talking here? Okay, so we're talking, 60-70% sellers, right? Which is taking the market lower. So at this point in time, order flow, the rate of orders, the size of those orders is pushing more towards the downside. It's a higher number of sellers, or the sellers have greater size and then are facilitating a downside move. That makes total sense, right? So let's move on to this next slide. So in this section here, what would you say, is the difference between the two forces? Are there more sellers? Are there more buyers? Is it about the same? So the market's in balance. And David, that's an incredibly powerful word, balance. In the previous slide, the market was out of balance, taking us lower. Sellers were more dominant. In this slide, we're seeing around 50-50, a slight bias to the upside, but we're seeing equilibrium, we're seeing balance, and the market is kind of moving sideways. Okay, now, in this section here, what would you say the bias is? Which direction are we pushing towards? What is, the overarching order flow? More sellers, what percentage, guys? What percentage would you say? 90% sellers? Excellent, yeah? So it's a large majority of sellers, large majority of, people taking the market lower, right? This is making total sense, guys. Everyone here understands order flow now. You're understanding how order flow works, what's actually happening in the market auction mechanism to take price lower, right? You've got a greater number of sellers, you've got a greater size for the sellers, and it's taking things lower. This is essentially what order flow is. This is what understanding order flow is. Charts give us this information, but the difficulty is you don't know what's happening next. Now, so let's go to this section here. What would you say is the percentages? Who's in charge? What are the numbers here, guys? Is it more buyers? Is it more sellers? Jack. Okay, so the bias is a little bit sideways, a bit more to the upside. So a slight domination from the greens there. Yeah, 60% buyers. And this last bit here, what would you say? 70, 80% buyers taking the market up higher. Okay, excellent, guys. So everyone's with me. Everyone's with me. They have an understanding of what this is. What these charts are basically showing us is the dominant order flow forces. When you're looking at a chart, you're looking at the dominant order flow forces, how the market's moving, how the market's changing. The difficulty is we don't know how long or how pronounced that move is likely to be, right? Because all we're seeing is price moving up or price moving down. That's the difficulty with price charts. They don't give you an overarching view, because even when we were going through these charts, you saw green candles, you saw red candles, you saw a mix. Even
All right, one moment, guys. He's logging out and logging back in. That was just a test to see if you were listening. So he'll be right back in. Yep. So apologize about that. You all passed? Yeah, that's right. You're awake. So. One moment, guys. Apologize about this. Yeah, that's right.
Hey guys, can you hear me? Not quite sure what happened there. Give me some yeses. Oh, thank God for that. I'm really sorry about that. I have no idea what happened there. It seems like it cut out, and then I could see everyone typing in the text chat, and I had to log back in to see what was going on. It's okay. So where were we? So in this flow here, we're seeing overriding, buyers coming into the market. Now, the charts are basically giving you an overview of what's happening, what are the dominant forces at any given point in time. But you're not really seeing, because if it was this easy, everyone would, as soon as they see, a green candle, buy and, watch things fly up. And I'm sure everyone here will agree with me, it's not that easy. And it's because we can't see the dominant forces, because throughout this up move here, there was a strong amount of order flow to the upside. Even though we saw red candles, a short-term dip, the overarching dominant force was to the upside, taking things higher. And it's that ability to understand order flow, which is why it's such a fundamentally important part of my trading, that really facilitates the movements of the markets and how the market is developing. Now, understanding order flow is really, coming back to that old method of tape reading. It's understanding the tape. It's learning about, how these orders are coming to the market, how they're affecting the markets. It's analyzing the rate, the size of orders that are hitting the market at any given point in time, and how those orders are likely to be affecting the market. So what we're essentially doing that, with old school tape reading, is we're looking at time and sales, we're looking for this flurry of buy orders coming in, we're looking at the size of those orders coming in, we're watching, order assimilation on the depth of market or the dome. Any of you guys here use the depth of market? Give me some yeses if you do. Do you guys look at how the orders are accumulating on your dome? Pay attention to that. So that's something I pay a lot of attention to. I watch the orders accumulate. I look at that information, not all the time, but when I'm paying attention to certain key areas. It's something I pay a lot of attention to. And I look at the rate of flow of orders, I look at the size of those orders, and it's something that I paid a lot of attention to. And what you're doing with this information is you're looking for confirmation of market inflections. So you're looking for price to reverse. You're looking for any sign from the order flow that we're about to turn around. You've got your support and resistance levels set up, and you're looking for this as confirmation to help you turn around, to help you look for confirmation in your move. And it's the same thing with the flip side of that coin, which is looking for momentum initiation. If you see a flurry of buy orders hitting the tape, you know that there's likely to be momentum coming into the market, moving things higher. The difficulty is it's very difficult. Analyzing the tape, reading time and sales, this type of thing, it's a difficult thing to learn, it's a difficult thing to do, and it's so subjective because you don't know if that's a fake order that's being placed in the dome, because that's not an order that's actually been read by the market. It's not actually an order that's been fulfilled. It's just sitting there. You don't know if it's actually, a fake order, someone spoofing you out, or this type of thing. So you don't really know what's happening with the dome. And the time and sales, because the flow of orders is so quick, it's so difficult for people to interpret, because you've got to have a point of reference to understand what time and sales is doing. You've got to understand, based upon, this certain market environment, you'd like to see this rate of orders and this size of orders and all of these different types of things. So they can really affect your ability. So just to break down that chart that we had earlier, where we saw the red segmentation, within each of those segments, you saw flows happening, right? So if we see sell flows, what we're essentially seeing is sustained and increased selling. So, the example that I've got here, let me just get my pen. Let's get this thing working. What should we go for? We'll go for red. Okay, so the example that we've got here, we saw this area here, and we were pretty much in balance here. The market was in balance. We were, riding a little bit up, a little bit down, but kind of hanging around the same price action area. Then suddenly we broke below here, and we saw an influx of sell orders. As we broke this flow. So this thing, broke its way down. And what we saw, this is day trading information. This is purely day trading. So what we're seeing here is increasing sell flows. We're seeing an increasing number of of sell orders hitting the market, the rate of those orders increasing, and the size of those orders increasing. So as these candles get larger and larger, what you're seeing is greater flows. You're seeing many more orders coming in, not necessarily, but that's generally what tends to happen. And these little rectangles that you see here that are separated, they're showing you that increasing flow. So in this one here, we started off with a relatively balanced market. In the second one, from these candles right here, what you're seeing is an increase. So about 60 to 70% were sell flows, moving the market lower. Now, what's interesting is capitulation selling. Is when you've got an extreme amount of selling as we hit the lows here at the bottom. This is the last suckers entering in the market, and most of the time that's us guys. This was me a long time ago, entering just as everyone else had finished their selling, selling it, thinking, yep, it's going to go lower. Generally speaking, the greatest number of sellers from our research and from analyzing the flows after a long sustained move tends to be at the bottom of that move, and then you see a capitulation. It's this term that's often used for describing the market on the higher time frames. You're seeing this capitulation, a massive increase in sell flows, the market then bottoms out, right? Because all the sellers have disappeared. There's no one else left to sell. So the sellers have got their fix. The last suckers are coming in, taking the sell at the bottom. They're kind of on the other side of the traders that are now buying and kind of looking for that sideways momentum to move the market a bit higher. So does this make sense, guys? How a move moves through these kind of phases of order flow? Give me some yeses just to let me know you're with me. Okay, great. We're getting some yeses in the room. Excellent. So as this move is increasing in velocity, you're seeing greater and greater number of sellers coming into the market, you're seeing increasing size, and when we get close to that, after this long move, when we're seeing the highest number of sellers, it's likely that the move is coming to a conclusion and we're hitting a capitulation. So this is sell flows. Breakout flows. Now, you'll see here that the market is in, let me make this a little bit thinner. The market here is in balance, and all the way through this period we're pretty much balanced. We're testing this support area here, which seems to be a pretty important area. The market's tip-tapping away, testing that support. Now suddenly breaks. So all throughout here we've been relatively balanced, an equal number of buyers to an equal number of sellers. The size of those orders, the rate of those orders have been pretty much matching each other. Now suddenly we see an influx of selling taking us lower, right? And we're seeing a violent move taking us lower, increasing rates of selling, increasing rates. So even throughout this little bump up here, we saw a sustained sell. We saw the market feeding sustained sellers coming into the market. So that's kind of what you're seeing with breakouts. Right, so we've got this important support area here, the market's breaking through, and everyone's jumping onto that because everyone's been paying attention to this particular area. So people are taking the market lower, sell, especially in this area, because this is the real test area. We broke through this area here, you'll see a sudden influx of sellers. These are the early birds catching the worm, and then we'll see the greatest volume in this area here. So in this candle here is taking us a lot lower, and the sell flows will steadily start increasing as everyone piles on, taking things lower. So that's a breakout flow. This is a breakout flow to the upside. What we're seeing here is, the price hitting a resistance area here. We've got generally balanced flows, equal number of buyers, equal number of sellers, and the market is kind of moving sideways. Now, once the market hits this resistance, we see a sudden click, a sudden burst of buying coming into the market, breaking out of that area. Now, what the market did do is then move back and almost retest this area here. So we had a burst of buyers coming in. They didn't confirm straight away. They came in, they retested that area, and then boom, we saw them take things higher. And we saw this proportion of buyers versus sellers dramatically shift in the opposite direction. We saw the buyers coming in, we saw increasing strength from them to the upside. So guys, do these examples make sense? Do these examples make sense? Are you getting the overarching view of how order flow affects the market, how it's evolving in the market, how it changes with the market, how at these kind of important junctures, like major resistance areas or support areas, if we do get a breakout, it can really, the order flow is what confirms that breakout. All right, guys, great stuff. So this is the original diagram that we saw. This is the original diagram that we saw. And no, Jack, to answer your question, no, the software doesn't draw any of this stuff. I've just drawn these rectangles on the chart just to show some examples just to give you a visual view of what the order flow is looking like at that point in time. So this is what I've drawn myself. So what you'll notice here as we go through these flows is we saw a bunch of selling here, steadily increasing until we hit some level of capitulation. We saw sideways action where the market found balance. And you'll often hear market profilers talk about the market moving from balance, out of balance, back into balance, out of balance. And this is exemplified to a T by order flow, because order flow is what decides what balance is. So if you're seeing the market suddenly move with sell flows coming in, we're back into balance here, and then we see a sudden increase in the number of sellers in the market, taking us lower, increasing, and we're seeing a capitulation here at the bottom. Like I said, guys, this is the last suckers coming into the market. The last people coming into the market, the last sellers coming in. You're seeing the highest volume of sellers at the bottom, right? And that tends to lead to a reversal. We're seeing balance in this area here, and then we're seeing the increase in the buy flows. We're seeing increasing numbers of buyers entering the market, taking things higher. Okay, guys, so the next segment here, the pit versus LM. Many of you guys, I'm sure, have heard of the pit. I'm sure everyone has, or the old open outcry system. It's based upon a physical presence. There's a bunch of guys in a big room, and they are basically trading the markets. They use hand signals. It's a very noisy environment, and they're constantly relaying orders from people who are implementing those orders. So it's large firms like Goldman Sachs, whoever it might be. They have their traders on the floor trying to get buyers for their particular flows. Now, in the pit, especially in the 80s and 90s, it was an environment in which a lot of people made a heck of a lot of money, because it was very easy, or relatively easy, to see what other traders were doing. So if you saw a big whale coming into the market, buying up the market, a lot of the floor guys would follow, grab on, purchase with him, buy with him, and take the market higher. And a lot of floor traders made a heck of a lot of money doing this. It was easier to see what other traders were doing and follow and hedge against what they're doing as well. And there was also a lot of manipulation there. A lot of traders would fake out, pretend that they're about to place an order just to scare other guys off. But more often than not, the guys in this pit environment made a heck of a lot of money, because they could see the flows coming in. They could see what the market was doing at any given point in time, because they could see the orders, and they would just follow these orders. Now, as I'm sure you guys know, the pit is dead. It's dying. I visited the pit in February, and there's a lot. There is still some trading that's going there, but it's kind of there's a lot fewer people. Everything's moved to the electronic systems. Electronic systems are cheaper. They're a lot more efficient. They're less prone to manipulation. And notice the stars there. You're still going to get guys like Goldman Sachs that are front running with their co-located servers and high frequency trading robots and this type of thing. More difficult to see and interpret what others are doing and why they're doing what they're doing. So the pit, it was almost an open book. You could see what other traders were doing, what the brokers were doing, what size they were coming in with, how they were moving the market, and you could, the little guys would follow the big guys. They would follow the whales, because a lot of the whales, they were hedging. They were the large cocoa producers and oil producers that were hedging against the market, hedging their risk, and they were placing these extremely large orders, and these guys were following them basically, in many cases. So, guys, moving on to tickStrike, software does. I think some of you guys may have, seen the charts that I use there and think that this is something that's on your charts. Basically, what our software does is turn order flow, which is this information here, into something audible. It allows you to actually listen to the flows. It allows you, just like the pit was the real premise behind this software, because in the pit you could hear the guys going crazy, when a bunch of traders were coming into the markets, trading in the pit, when a bunch of these guys were coming in, you would hear everyone screaming and shouting and going wild, and people would start following these guys in. They would follow the buys in. What we've tried to create is an electronic interpretation of that information. That's what we're focusing on. We're getting that information, and because the electronic exchange is basically giving you every order that's coming through. It's not subjective. You're not relying upon people screaming and shouting. You're actually listening to the flows based upon what's been actuated at the exchange, and that's the power of it. And what we've tried to do with tickStrike is recreate the pit in a digital world, because pit noise, was all about the escalating sounds of buying and selling. It's these guys screaming and shouting, buy, 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 sell, sell, sell. Cliches we hear about traders. And it basically gave an indication of the positioning of large traders. It created a herd effect. People would, when things in the pit would go crazy, they would follow what everyone was doing. tickStrike is pit noise for the digital age. And what we're doing is using underlying trade information. We're using actual information that's going through the exchanges, and it's creating an almost systematic way, an automated way of analyzing that information at any given point in time. That's what we're trying to do. So, guys, this is the tickStrike software. This is what it looks like. It's a crazy kind of wacky design, and it uses basically an orb system. We've got the login box, we've got information, we've got a bunch of other things. As well as the audible feature, there's the visual feature. So you can actually, as well as hearing the orders coming through, you can actually see the orders coming through. And you'll notice that there's 3 red bars there. It will show you the strength of buying or selling at any given point in time. So it goes from 1 to 10. 1 is low-level selling. 10 is extremely crazy, levels of selling coming through. So that's kind of how it works. And what it's all about, what the software does, it adapts to changing market conditions. So if volume increases or volume decreases, the software adapts based upon the rate of order flows, the size of order flows that are likely to be coming through based upon that environment. It's designed to learn and adapt to what the market is doing. Okay, guys, so why now? Why would you use this type of information? tickStrike as a software, it works best in volatile market conditions. And, that's kind of what we're in because of the Euro crisis, because of global sovereign debt issues and the recession and this type of thing. And Tommy and Norman have actually asked some good questions there. What the software does is it only analyzes orders that have been filled. So orders that are actually hitting the tape. So the orders that are actually moving the markets. And guys, I wish I had an example set up or a video, but we don't. But we can work through that. And the question I'm sure everyone here is asking is, how would you use this type of software? How would you, how would it help your trading? Multiple ways in which to use the software. You can use it for trade management. So say, for example, you've entered a long trade and you want to stay in that trade longer. If you can actually hear the flows coming through, so you've entered this trade and you're hearing nothing but buy flows coming through, you can hold on to that trade longer because it's telling you buyers are coming into the market. Even if you get a red candle on your chart, the software will stay quiet if those flows aren't significant. It'll help you stay with the market for longer. It helps you let your winners run, and it provides objective information in terms of the strength of buying or selling, the strength of the traders that are hitting the market. Also for stop management, if you've entered a long and you hear order flow coming against you, taking on the sell side, you can exit that trade earlier because you can hear these sellers coming in. It's giving you that audible impetus to get out of the market. And this is, it's designed for day trading. This is purely designed for day trading. It's for short-term environments, for short-term trading. Another way to use the software is trade initiation. So in more volatile environments, so one way you can use it is for management. Another way is to initiate your trade. So, I kind of only use this strategy in more volatile environments. If the market is absolutely going crazy, like especially in the crash in 2008, it was a very powerful tool because we saw these long extended moves with consistent selling. So in volatile environments, you hear the sells come in, and it would, you basically jump on the back of it, just like the traders in the pits used to do. They jump on the back of the sellers and sell in with them. So you can hear buyers coming in with the trend, you can hear sellers coming in, and you can use it to enter a trade to get on the same side as them. Okay, guys. Rudy, no, the data actually comes as part of the software. It's all included in it. I'll try and answer all the questions at the end, guys. There's plenty of time for that. I'm just going to run through some of the features. So another thing that I've been doing, and a lot of traders do, in high volatility environments, you can use the software for trade initiation. In low volatility environments, we do something called tick-strike fading, where we actually trade against tick-strike. And it's really great. It's really great for identifying capitulation moves also. So if you've seen, screaming selling for a prolonged period of time, and we talked about this earlier, and you're seeing a large percentage of sellers at at a certain point, you can actually look for positions against those sellers because it's likely due to the volatility, due to the size of the sellers, the number of traders coming through, that this move is likely to end, and you can look for a reversal. And in low volatility range band, low tick strike action, like if it's a single, if you're getting a single order or a single level selling or single level buying, you can actually use it to trade against. So if you see some sellers coming in, you would buy, based upon that ranging environment, and support and resistance and other measures. One of the most powerful ways that we get a lot of people using the software is breakout trading, and this is a very cool bit of kit for breakout trading. When you're breaking out from major support or resistance areas, tickStrike can confirm the influx of buy orders, with that breakout. So you're seeing price hit a certain area, you're seeing price, you're seeing buyers confirming that breakout, and you're moving much higher. It can also help identify fake outs, because if you're seeing a pop and it's not confirmed by order flow, on the other side, so you're seeing a small pop up and then you're not seeing that consistent flow coming through, maybe this isn't the trade for me. All right, guys, the value of tickStrike and the research that it provides here is you're able to audibly see and hear order flow. You can see what the market's doing at any given point in time. You can hear how the orders are coming in. You can quantify and understand the momentum. It will alert you to the changes that are happening in the market, and it really helps you live up to that old saying of letting winners run, cutting losers short, using and adapting and going with the overall flows of the market. And it allows you to adapt to changing market flows. All right, guys, if there's any questions, feel free to ask away, and I'll be happy to answer any questions. I know there were a bunch that came in. I'll try and answer them as we go along. For special offer. It's much like the offer that we sometimes have at Pivot Farm. You can get 6 months of a single market of tickStrike for $97, and you can get 6 months of any 10 markets for $297. The URL is for tickstrike.com/TP, and these are all the symbols that are covered. You'll see them on the screen here. We are actually going to be expanding the software to stocks pretty soon, and we do have an all markets package as well. That's not listed here, but if anyone's interested in stocks, I'd recommend buying that, and whenever we facilitate that, we'll let you know. The promo code for this is TradingPub, and the software comes with a 14-day guarantee, like a 14-day trial period, so you can try everything out, see if it's for you, and in that 14 days, if you decide it's not, we'll give you a very fund. So guys, tickstrike.com/TP, it essentially allows you to hear the order flows as they come into the market. Hi Eric, one market in Forex, yeah, that's only one pair. That would be one pair. Hi Joseph, yeah, I'd recommend just signing up for a trial. It's very, very simple. Rusty, we are going to be adding grains, corns. We're focusing on the higher volume markets at the moment, and over time we're going to be adding a lot more markets. We're kind of at 15 markets right now, and we're going to be expanding the range to about 100 before the year ends. So a lot of stocks, a lot of things. Norman, yeah, this is actually what I use. This is Pivot Farm and tickStrike are what I use for my own trading. tickStrike was actually an indicator we had about 4 or 5 years ago. That's when it was developed, and we've been using it for our personal trading ever since. Hi Gary, do we partner with any trading platforms? For this product, no. It's completely independent of trading platforms. It has its own data feed, so you don't need to purchase an extra data feed at all. It's completely independent. Hi Mike, up until this point, what markets has tickStrike been used for? All the markets we currently have, that's what we've tested to a large degree. We've got quite a few markets that we're testing at the moment, like Apple, Google, quite a few stocks that we're looking at as well. Hi Michael, currently it's with futures and Forex, and that's what we've kind of focused our attention on. Gilbert, it does work in the after hours, but because the market, after hours market for the futures has quite low volume, the data it's not as substantial. It's not something that I personally would trade using the software. Hi Robert, this is a desktop software, so you would actually have this software on on your desktop, giving you the overall market flows and information that you'd need. Hi Michael, does it work well in the Asian sector? It depends on what you're trading. For Forex, it seems to be fine because we aggregate quite a few feeds, but for futures, because the market's a bit slower, it's not something I've tested a huge amount. There are some traders that use it, for Forex, for the Asian session as well. Hi Bob, what's the best time frame for using this with Forex? It's a day trading tool, so the low time frames are the best in terms of using the software. The lower you, I mean, it's basically designed for short-term trading. So any time frame under 10 minutes should be fine. Okay, I've tried using time sales. Trusting to bigger ask price doesn't mean they're matching buy or sell. Can you have a limit order? Yeah, okay, the product does distinguish from that. Basically, the data that we have analyzes the type of order that's coming in, the size of that order, and the rate of those orders. Paddy, yeah, you should be able to do that. That's fine. Hi, Michael. This is not an EA person. No, it's a completely independent software in and of itself, and it has its own feed. Hi, Ralph. Yeah, there's a variety of ways for using it. It's used by a lot of scalpers as well, and my main way of using it is to basically recognize the overall flow of a particular movement and go with the market at that point in time. Hi Frank, what about when algos, it looks at cumulative flows. So not just the size of any particular order. It looks at, the cumulative flow at any given point in time to decide. So yeah, the high frequency trading robots is something we pay a lot of attention to. And the tool, as we adapt it over time, will have a focus on, that type of information, identifying when HFTs are coming into the market. We're actually working with some other guys to figure out a way to kind of add a visual element as part of the software. All right, guys, thanks a lot for your time today. I hope you'll try the software out, and appreciate everyone being here today. We'll wrap things up now. The offer is available for everyone here today. Hi, Robert. Does it identify spoof? No, it doesn't actually look at the orders on the DOM. It looks at orders that have actually been implemented and gone through the markets. Cheers, guys. Thanks a lot.
All right, great. Thank you, Aamar. We appreciate you being here. And yeah, so basically, if you're interested in taking advantage of that, like he typed in there, and something that Aamar does is offer a 14-day. Basically, the demo or the trial, you get 14 days to try it. So that's the way that it's set up. And the promo code to get the 50% off is TradingPub. And one thing that's cool, and I actually got this because I was one of the original subscribers to Pivot Farm, is that whatever rate you initially subscribe at, that's the rate that it continues, going forward. So basically that discount is good as long as you're a subscriber. So that's a very helpful thing, and I think that you guys will appreciate that as you see that Mars put a lot of time and development into this, and does a very good job of working as far as customer service goes with any issues that you guys might have. So if you have any questions, definitely be sure to let us know. Hopefully you guys enjoyed this event. This is the first event that we've really had on this type of a topic and order flow, and I thought that it was good. Like Mike said, good presentation as usual. So we did record the event. We'll get a copy of the event posted to you, hopefully either this afternoon, if not this afternoon, early tomorrow morning. So we'll try to get a copy of that out over Twitter, Facebook, and email to you. to make sure you have time to review that. But again, too, I know that if you have yeah, that was primarily what I had tested it on, was with the ES, Rudy. So like I said, Aamar set me up as a beta user, and he's been testing this. Aamar, I don't have a date, but I feel like it's been close to a year. It's not like this was just developed yesterday and he's rolling it out. So it's been through a lot of testing. But hopefully you guys enjoyed this event, and always a pleasure having Aamar join us. Remember, keep in mind, if you guys know anybody that trades in Greenland, be sure to send them our way. That's going to be our goal, is to find a trading friend in Greenland. So thanks again to everyone. We hope you have a great afternoon or evening wherever you are, and look forward to seeing you at our next event, which will be on Thursday. And if you guys are interested in joining us on Thursday, you can click here. So we'll shut the room down in a couple minutes, but again, if you go to tickstrike.com/TP and use the promo code TradingPub, you'll get a 50% off, and also you get a 14-day trial with that to make sure that you like it, make sure it works for you. Subject Thursday will be 8 different types of market profile days.